Hey everybody, it's Harrison. Welcome back to Maine Connect, your source for all things small business and real estate in Maine. There's been a lot of questions lately about the changes in the mortgage market. It feels like every day there's news coming out, there's things that are happening. So I thought it'd be a good time to get Corey back to talk a little bit more about what's happening in the mortgage market right now. So with that, welcome, Corey.
Hey Harrison, good to be back, man. Thanks for having me.
Absolutely. So, you're the guy that's got a finger on the pulse of what's going on in the marketplace. You're talking to borrowers every day. What are we seeing right now? Where are the rates at?
Rates have been hovering. We've been in the same spot, like low sevens, the last 2-3 months or so, and are still in that same spot. Have not seen much, variance every day a little bit, but not crazy.
Okay, so pretty consistent, pretty stable, but a lot of data just came out. You and I were talking before we went on air about just all the data that came out. So with that, I know that you're a guy you're paying attention to that because that clearly dictates how you advise your clients. And what's the data showing? What does that outlook look like right now?
So the most recent report that came out was the Consumer Price Index yesterday, which tracks inflation. It came out 0.6 higher than last year, 0.6%, which is what the experts predicted. So like right in line with what should be happening. I think it shows what the Fed's doing is working. It's just taking a longer time for that to come into play, right? Which has been annoying because that's going to impact the mortgage rates specifically, and what's going to happen with like the overall economy there. It also impacts like if the Fed's going to bump their rates up or down. So I'm excited to see what the next meeting holds. So there's been a lot of chatter if they're going to increase it again or hold it still.
Yeah, so and we were talking, you mentioned the fact there's not a lot of clarity in what the Fed is going to do. There's a lot of different opinions out there. But when you look at the mortgage market, do you feel like the mortgage market is pricing in one move or another, or is everybody just kind of waiting to see what happens right now?
I think at this very second they're waiting. I think what we thought last time was they're going to hold it again and not raise it if they didn't need to. The data is supporting that. Once this report came out, the markets didn't really move one way or the other, which you would expect to see if it was way off on one side or the other side. So I feel like they're just kind of status quo for the second until other reports come out. The big thing you have to pay attention to is the unemployment reports too. We talked about that earlier as well. That's a big indicator right now. I feel like the Fed is almost trying to cause like a job loss recession, because that's how they're going to slow the spending down somehow. The only way is to get jobs. People will get unemployed, unfortunately, which is what we're going to start to see more of, I think, down the road.
Yeah, I think that's the interesting thing with the economy is that you've got the economy is this massive, beast they're trying to control, and there's all these factors. And as a reference point, I think if we go back over the summer, we were seeing inflation in the 8 to almost 9% range, down to 0.6, which is great, but obviously, we're still seeing some. And there is a long path to get this corrected. And you mentioned before, there's this concept of a soft landing, and they're trying to manage to that. What does that mean? What is the ultimate goal they're trying to achieve here?
I think their goal is to bring inflation down to the level they want to get to, that 2 to 3% year over year, right? That's kind of what they're shooting for. And right now it's at 6.7 or 7% year over year. So like it went up 0.6%. So I feel like they want to slowly bring that down, which is the safest way to not have a huge recession. The soft landing that everyone's talking about is when they can kind of land the jet, I guess you'd say, like nicely, and not have a whole lot of job loss, price changing, just instability. And I've seen different reports whether that's realistic or not, because I feel like there's never going to be a soft landing. Something's happening one way or the other to drive those prices down and to drive inflation down.
Yeah, I was always taught back in my in college in my master's program, when you think of the economy, think of it like a balloon. When you pump air in, it's like putting money into the system, and the balloon just keeps getting bigger and bigger. There's only two ways to let that air out. You either pop the balloon and everything happens at once, and that's loud and scary, or you find a way to open up the balloon and let the air out slowly. But that's not always perfect because it takes a long time. And but ultimately, either way, you've got to get some air out of the balloon. You can pick one of two paths to do it, and one's certainly a lot more pleasant than the other.
And I feel like they've been trying to do the slow grind for a while. That's not necessarily working, based on it's taking the experts all predicted this to be happening much sooner than it's happening.
So given that, is the overall outlook the same? Do we still expect some relief sometime next year? Do we think that's continuing to get pushed out? Does it move forward?
Yeah, no, I think the most recent report I saw, there's different talking heads out there that have different takes on the economy and what's going to happen. I would say that most of them are saying Q1, Q2 next year at this point. I think even did Fannie Mae or Freddie Mac put out a report recently too, where they're predicting mid-year, I think I saw, to start to see that decrease again too. So it's good when all the different factors are kind of like combining, like saying we agree to a certain percentage. Whereas recently they've been like kind of all over the place. What's going to happen when they start to kind of like level out in regards to predictions? I feel better about that, but likely quarter one, quarter two, quarter three next year, another 6-9 months out.
Gotcha. So, and you guys posted some interesting stats the other day about homeowners and you know where the average homeowner is at in terms of the rate they currently have versus where the market is, and how that's causing people to not necessarily want to sell their home right now. Can you share some of those stats real quick, Corey?
Yeah, I saw a stat we put on our social media the other day where 71% of prospective home buyers are waiting for rates to drop to 5.5% or lower before they do anything. Like historically, that's been kind of the sweet spot where we see movement again, and sellers are going to want to sell and not go from like the 3 to a 7, but go from like a 3 to a 5.5. So that's not a hit for them at that point. I saw another stat though where I think it's like 90% of mortgages in the country are under 5% right now. It's just an absurd percentage, right? It was during 2020, 2021. There was a bazillion transactions everyone refinanced because at the time they were all-time low rates. So now it's the term we're using is like the mortgage rate lockdown. Are you stuck with your rate? Because you don't want to risk losing the rate, or like what something has to give to make that move happen.
Yeah, no, it makes sense. So last question for you, Corey. Given where things are right now, what are you advising borrowers and buyers to be doing right now? If people are out there looking for homes or considering looking for homes, what does that conversation look like right now?
Yeah, I mean, it's very similar to what we talked about before. I think we're still, the budgeting is a very important part. First thing we bring up in every conversation still is like, what's your comfort level? Where do you want to be? If we can hit that budget and they can purchase a home now, knowing they're going to hopefully have the chance to refinance down the road, it makes sense. I think that a lot of clients they'll know they'll have that chance eventually, and they're paying rent. Rent's also going up a ton right now. Like I saw a rent increase year over year, and that consumer price index is up 5% across the country. So that's not slowing down either, right? Like that's accelerating still. So if you can get a mortgage, you have the savings, hammer through the mortgage for a few months until you can refinance. Like that's the goal. But for some clients who are coming through, like the conversation is this is not the right time. Like with price points being escalated and budgets being pushed, like it doesn't make sense for a lot of clients. So that's how we're having real conversations that this may not be the best time to purchase.
Yeah, and I want to get your opinion on something I've been hearing a lot lately, and that is, a lot of buyers are finding that they want to buy right now because they feel like maybe the rate's not great, but the price is something they can work with. However, the concern is if they wait until spring when rates do come down, now you're going to get a slightly better rate, but now we're going to see prices expand again. Are you finding there's that general consensus in other places, other people you're talking about too? Absolutely.
I mean, I think this point was proven in February. Like rates dropped. We had the lowest rates we had in 6 months before that. Dropped to like 5.99 or 6.125 for like a day. Mortgage applications those 2 days, like the day it happened, the day after, jumped exponentially. So I think consumers are being very smart in regards and being very savvy to what's happening with the markets more so than ever before potentially. So when those rates drop, like you're gonna have buyers jump back into the game, and now we're in the same problem we had before where price points get escalated, right? So is it better to get the property now knowing you can have the chance to refinance, or get the risk of overpaying at a little bit lower rate down the road?
Yeah, there was a phrase that we've had for months, and I think people got tired of hearing it, was the idea of marry the house and date the rate. Go find the house that's right for you, buy it at a price that works for you, knowing that you can always change that rate later if it changes. It's easy. I can fix a 7.5% rate. I can't fix $100,000 more in your purchase price. There's certain things that you can account for, and it's buyers really have to take into account where they want to be, when they want to be there. Does it work for them? And then is there potential that it could get better for them down the road? But ultimately, like you said, if now just isn't the time, if you can't make it work right now, don't force it. Make the best decision for you, but don't try to force something.
Absolutely. And I saw something too where as part of the CPI report, they're going over the year-over-year changes. Like last year this time, that phrase has been out for over a year. We've been talking about that for 18 months maybe, since last May of 2022 when rates were like 5%. Like, oh my gosh, this is crazy. Like the rates are so high. Remember those conversations? And now it's like a year ago, the rates were 1% lower. So it was around 6.25. And we're like, oh my gosh, this is crazy. It's going to come back down. It's all perspective on timing, right? Like if we had 6% now, everyone's back out shopping again.
Yep.
So just keep that in mind if you're out there looking. Like, make sure you're making an educated decision in affordable, budget-wise decision as well.
Yeah. I bought my very first house at 7.25%. I thought that was a great rate at the time. Now I'm at 2.875%, and I understand the difference. So I get it. It is a big difference. And we went through unprecedented times of really cheap money. Obviously, that's got to get corrected, but at some point, this is going to settle into something more normal. So let's hope that sooner rather than later.
Absolutely, definitely.
Awesome. Well, if people want to talk to you, Corey, learn a little bit more about the rates, their personal situations, what's the best way to reach you?
Yeah, they can give us a call, 207-400-7750, or shoot us a note at cscott@harborone.com. Instagram, Facebook, TikTok, we're on all the social platforms as well.
Yeah, I see the daughters had made an appearance on the social media, and they're great, so I love it.
We are pushing financial literacy so much. Like, I feel like that's something that's been lacking across the country, and definitely in certain parts of the country more so than others. So trying to start them young if we can. Yeah,
definitely. I would highly recommend you follow Corey's social media. His daughters are dropping some fire financial education, and they're keeping everybody updated in the market. So it's all good stuff.
Cool. Thanks, Harrison.
Right. Appreciate the time, Corey.